Hello friends, welcome back to Investment Professor, where real investing meets real results. Today, I'm going to walk you through a simple but effective scalping strategy that works perfectly for scalping. This method is easy to follow, works across different markets, forex, crypto, options, and most importantly, it's reliable. Disclaimer: the information presented in this video is for educational and entertainment purpose only, and is not a financial advice. I am not a financial advisor. Trading can result in financial loss of funds. Individuals must consider all risk factors, including their own personal financial situation, before trading. All individuals are responsible for their own trades and investments. Please take this information and do your own research. This strategy uses altered moving average with a key indicator called the Williams Fractals, and we'll combine it with a few moving averages to make it even more powerful. This method is easy to follow, works across different markets, forex, crypto, options, and most importantly, it's reliable. Let's dive right into it. First, open up TradingView or whatever charting platform you're using. Set your time frame to 1 to 5 minutes, but know that this strategy can work on other time frames for scalping. I am using 5 minutes. Now let's start by adding the Williams Fractals indicator. Click on the Indicators tab, type in Williams Fractals, and choose the one that appears. You can use the default settings, but make sure the period is set to 2. As for the colors, I like to switch the red and green so it's green for buy signals and red for sell signals. This makes it easier to read the chart. Next, we're going to add some moving averages. Go back to the Indicators tab, type in 3 moving averages, and select the one by Advent Trading. Once you've added the moving averages, we'll adjust the settings. Open the settings for the indicator and change the lengths as follows: length 120, length 2, 50, length 3, 100. These 3 moving averages will help us spot the trend direction and determine whether we should be looking for long or short trades. To make things simpler, I recommend changing the colors of these lines. Change the 20-day moving average to green. Change the 50-day moving average to yellow. Change the 100-day moving average to red. Now we have all the indicators set up, let's move on to how the strategy actually works. Here's the most important rule for this strategy. You can only enter a long trade when the 20-day moving average, the green line, is above the 50-day, yellow line, and the 50-day is above the 100-day, red line. This tells us that the market is in an uptrend, and we're only looking for buying opportunities. Always remember, trend is your friend. Never trade against trend. If these lines are crossing each other, or they're not in the right order, you should not enter a trade. Why? Because that means the market isn't in a clear trend, and the chances of the trade working out are lower. For short trades, it's the exact opposite. The 100-day moving average, red, should be on top, the 50-day, yellow, in the middle, and the 20-day, green, at the bottom. This setup tells us that the market is in a downtrend, and we'll be looking for selling opportunities. Now that we know what the moving averages should look like, let's move on to the actual trade entry rules. For a long trade, buying opportunity, here's what you need to look for. The price should pull back under the 20-day moving average, green line, or sometimes even below the 50-day moving average, yellow line. Once the price pulls back, you'll need to wait for a green arrow from the Williams Fractals indicator. This is your signal to enter the trade. Let's look at an example to make it clearer. First, check that the moving averages are in the correct order. The green line, 20-day, is above the yellow line, 50-day. And the yellow line is above the red line, 100-day. Next, wait for the price to dip below the 20-day moving average. Be patient and watch for the Williams Fractals indicator to give you a green arrow. Once you see that, it's your signal to go long, buy. For risk management, place your stop loss just below the 50-day moving average, yellow line, to protect yourself in case the trade goes against you. Set your take profit target at a 1.5 risk to reward ratio, but I prefer a target on previous high. If the price continues to drop below the 50-day moving average, but then gives you a green arrow from the Williams Fractals, you can still take the trade. In this case, place your stop loss below the 100-day moving average, red line. One very important rule to remember: If the price falls below the 100-day moving average, you should not take the trade, even if the Williams Fractals gives you a green arrow. The reason is simple. When the price is below the 100-day moving average, the market is likely in a stronger downtrend, and the risk of the price continuing to fall is much higher. Ignoring this rule could lead to unnecessary losses. Here's an example of what happens if you don't follow this rule. The price dropped below the 100-day moving average. The Williams Fractals indicator gave a green arrow, but as you can see, the price kept falling. This is why we avoid taking trades when the price is below the 100-day moving average. Now let's talk about short trades. The process is similar but reversed. First, make sure the 100-day moving average red line is above the 50-day yellow line, and the 50-day is above the 20-day green line. Wait for the price to move above the 20-day moving average, and then wait for the Williams Fractals to show a red arrow. Once you get the red arrow, it's your signal to enter a short position, sell. For risk management, place your stop loss just above the 50-day moving average. As I said, target will be previous low. If you are a risk taker like me, then you can hold and look at the profit, a wonderful 55.5% for scalping. Wow. In this case, it's important to stay patient and not panic. Trust the strategy. As long as your stop loss and take profit are set, let the trade play out. One thing to keep in mind, especially if you're trading on the 1-minute time frame, you'll get a lot of signals. This is great for scalping, but you need to ensure that your broker or trading platform offers low fees. High trading fees can eat into your profits, especially when making multiple trades in a short amount of time. I prefer to avoid scalping with this strategy in stocks because when I tried, the win rate for stocks were low in comparison to the reward to risk ratio. If you found this video helpful, please give it a thumbs up and subscribe to stay updated with all my latest videos. That's it for this simple and effective scalping strategy using moving averages and the Williams Fractals indicator. I've just shown you a clear, step-by-step process that you can start using today. Watch out other videos on my channel to be a professional trader. Thanks for sticking with me throughout this video. Now it's time to put what you have learned into action. Take notes, learn from it, and succeed. Let's grow together. Drop your questions or thoughts in the comments below. Thanks for watching, and I'll see you in the next video.